Hey, good morning.
Como deli boo. Dee boo boo.
Man, it's been a long day already. How you doing? I've had 2 energy drinks, a giant cup of coffee. 2 energy drinks and then the 5 espresso. Happy Friday, baby. I've been wearing this watch in like a decade. It's so cool to have it back. It's like an old friend. All right, so I guess music's dying, so that means we need to get on with it. All right, let me get rid of this and let me move that around. You guys ready to go? Huh? All right, hang on. I got to move this here. It's complicated. There's lots going on. All right, there we go. What is this? Oh, Skype. Anyways, okay, there, good. I'm ready to go. Yeah. All right. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never, ever risk money you cannot afford to lose. Yo. Hey, my name is Wayne. I'm a currency trader just like you. It's 8 in the morning, and I got 3 hours in so far. Yeah, that's how you roll, yo. So anyways, but hey, some of you Europeans, you've been at this for 6 or 7 hours. Yeah. I gotcha. So anyways, money never sleeps. So cool. So what we will do today is go through the charts. We've done enough fundamentals, right? Just go through the charts. What do you want? So you let me know. Let me know what pairs. I'll tell you what. Let's just do you ask me. I'll let you lead. Okay, I'm tired. I'll let you lead. You tell me what you want. I'll do that. How about that? That's easy. That's an easy plan. The one big thing that's happening today is earnings season has begun. Today is the day all the banks are reporting. Very cool. So this is a big new step, and I think we're also going into the quiet period for the Fed, because of the upcoming Fed meeting. So anyways, really cool day. Lots to do. So much interesting things to consider. With that being said, just ask questions, get involved, and I will do my best to serve. You're the boss. I am a humble servant. So please leave a comment and a like and a thumbs up and tell YouTube this is quality content. I am doing my best to have a positive influence on your trading and investing career. I want to make a difference. Cool. So there are resources that are available to you, and I think you should check them out. I think you need to have a foreign exchange broker that you trust. I trust Trader's Way. So if I'm a YouTube social influencer, I'm trying to influence you to go check them out. Do your own due diligence. They earn my loyalty and respect by the way they behaved in the market when the market was stressed. In fact, the market was so stressed, giant brokers went out of business. Trader's Way was perfectly fine. So I'm like, that in of itself. So go check them out. Do your own due diligence. Open up a demo account. Check out the back office. It's clean. MT4, MT5, C-Trader, and more. But check them out. Cool. The next thing is, I don't know if you know this, but I post macroeconomic videos every day to YouTube. Did you know that? They come out at 10 a.m. every day. Like morning, I think. Okay, every day. This is us comparing commitment of traders report data between a couple of different assets. Here's us going through the calendar. Here's us going through the charts. Okay. Here's us going through the scatter plot. Here we are looking at risk on or risk off market sentiment on 3 different time frames, looking at the S&P 500, gold, the yield on the 10-year T-note, Dixie, the Japanese yen futures, and the VIX. We're looking at that on 3 different time frames as a basket to discern risk on or risk off. I mean, cool stuff. So the next one comes out tomorrow. Oh, that reminds me. Good. I'm glad I did this. That comes out today at 10 a.m. So check that out. It's youtube.com/@quantbox. But yeah, good. I'm glad I did this because on Tuesday, I'm doing an outlook, the next 90 days of trading. Let me post this here. Next 90 days of trading conditions. I will share with you, I'm guessing, probably about 35 different studies so that you can understand where we are now, how that compares to normality over long periods of time, how it compares to different, let's say if you look at what happened during COVID, how does that compare to other times of stress going back 100 years? And also give you a sense of where we are as getting back to normality and whether we face recession risks or not. So we're looking at a lot of data, like probably 35 to 40 different things that I'm putting together for this Q3 global market outlook. Plus, we have all the stuff on QuantBox, too. So you guys asked for it. I wasn't even going to do it. So now you got to do your part. You got to sign up. And by the way, it's 10% cheaper than the last one. It's not $11. It's $10. Yeah. So anyways, make sure you do that. Cool. And then subscribe to the QuantBox channel. That's cool. There's already 169 videos. Cool. And also, I would love you to visit Investor Bootcamp. It's FX Bootcamp rebranded, and now I want to include things like real estate, personal finance, and more. You want to learn hedge fund strategies? Yeah, I'll do that. You want to do a course on trading gold? Yeah, I've already done a course on trading oil. It was only 16 hours long. Still $88 a year, but we're going to expand and cover all different types of asset classes. So instead of Forex only, learn how to invest and trade everything. Maybe a crypto course? You tell me. It was made for you. Cool. All right, all right, all right, all right. Alrighty, alrighty. Let's take a look at the short run. Zip, 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 zip. Okay. So on the medium term, what this chart is telling me is risk on. Okay. Now, if this is risk on, then the money is going somewhere. If it's leaving the United States, where is it going? Well, there's been a big move here. There's been a big move here. There's been a big move here. So that seems pretty easy. Right? That seems pretty easy. So risk on would be Euro or an Asia Pacific. So let's move over and do that. Okay, great. So now what? Technical analysis to buy a dip at support. Okay, or this whole thing is over. So you need to decide whether you're going to sell that top or buy a dip. Well, it depends on what your Q3 outlook is. Are you a bull or are you a bear? Is you or is you ain't my baby? You're like, I don't know. I just trade the 5-minute chart. Well, okay. But nonetheless, I think that's probably important. Are you going to scalp this down? Okay. Let's do some scalping. What do you think of that? Now, scalping goes like this. Okay. First, you need, in this case, I'm a bearish scalper. You're going to need a top. Top AKA resistance. Okay. Do we have a top on this? Yeah, it's a double top. Okay. Then what? The second stage is you want to look for essentially a 1, 2, 3. 1, 2, 3. Now think of a 1, 2, 3 pattern as really a breakout kind of pattern. So you have this. You have the up, respect resistance, up, respect resistance, up, okay, respect resistance, meaning up and rejection. And then something interesting happens. Lower low relative to the old support. Soon as you get that, you have permission to engage to the sell side. Now, actually selling where I sold, that I wouldn't do that if I were me. Okay, I sell this way. I would sell here if I were me. But nonetheless, it gives us fodder to look at. And what you're going to try to do if you're a scalper here is continue with the price action, right? So really, so we have this. Well, let's pretend it makes a lower low. Let's pretend it drops here. Okay, so we get a defined lower low. What you do next is you look at old support. So we have this drop, we have this drop, and we have that drop. And you drag this across, and in the future, you would sell basically where I put that order. So this is a piss poor trade, but hey, look, we're talking about it, and that's the whole point of this. Okay, so we zoom in. We know we're at resistance on a small time frame. Okay, we know that. So that's the one. So let's do this. 1. Okay. 2 is the lower low. So 2. And then 3, we should be short up here. That's trying to, right. We're supposed to be short here already. So you would have shorted this. And now you'd be well into profit instead of just getting into profit. Okay. Richard's right. This is called price action. Yes. Another way of looking at it is on a small time frame. Let's do this. Insert indicators, custom price action pivot points. Let's do it over 21 5-minute candles. Okay. That might be too aggressive. Let me open that up. Let's go back to price action pivot points. Let's go back to the standard 55. And it's calculating. Yeah, see, calculating. There we go. Yeah, I like that. Cool, that's the standard setting. No wonder I like it. All right, cool. And now what you're trying to do emotionally, okay, is once you have to define lower low, I mean, it's definitely a lower low. It's when you feel confident in the lower low, but nonetheless. Yeah, how come I can't grab that? Oh, that's a pivot, I guess. Interesting. What you're thinking emotionally is you're projecting this way. So let's say that's the mean and the proper slope of the mean. It's not quite. It's pretty close, though. Emotionally, what you're thinking is you go to trendline properties and you pop on the ray and it projects it forward. So what you're thinking throughout today, okay, is the up, down, right? You're thinking this. I mean, it's really, you could move it. In fact, let's actually move it. You're moving it, and you're trying to grab the proper slope. It's not quite right. Close. Okay. The problem with that is the momentum changes. So price action pivot points are constantly adjusting the slope where your ray, all right, and you can see it's actually sloped down a little bit, doesn't adjust. So that's why I like the price action pivot points. But like I was saying, emotionally, you're trying to project this into the future, which shows you the future rate of change. So until it stops working, as a scalper, you're going to be doing stuff like this. Okay, and how far it falls determines, okay, because of the old support, that produces the potential new place to sell. And then if it makes a lower low, the old support gives you a projection of the new place to sell. So when you're down here, you're thinking selling here. You see? Because as a bear, you only sell pullbacks. So if I, let me go to that higher time frame now. I want to get rid of this thing. Oops, that's not right. I want to get rid of this. Okay, cool. By the way, the upside target, as you already know, just to reaffirm, the upside target is way up here. You remember doing this, I don't know, 2 weeks ago? Up, 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 down, down, buy, and the target is here. The longer term target, of course, but target nonetheless. You guys remember that? Those vertical lines have to do with measuring momentum of that move over time. Okay? Yeah, cool. Good. You remember. Oh! So, nonetheless, on this daily chart, even if you're a bull, okay, even if you're a bull, what you're looking at, and let me zoom in a little bit, right? We're looking at this. Even if you're a bull, you want to, or let's say if you're a bull, your next move is really to buy off of this future 5 EMA, right? So even on the short run, this can fall. It'll hit resistance, come down, hit the 5, and then jump up. The next level is the 21, and I'm doing this like a projection. And then the next one is the 55, right, which would be a lag even more. And there's a spread between the 5, the 21, right? So, like, even if you're a bull, is it possible that the double top breaks the 5 and drops us to the future 21? And then we continue north on the medium-term trade plan? Yeah, that could happen. right? We don't know if it will, but it is plausible. So you'd be selling basically, what is this, 169 and targeting 168. Yeah, that could happen. And it'd still be bullish. But the difference is the time frame. Now, you might go for 100 pips, but if that truly is a reversal pattern, okay, then, we could fall to 65 because of the R1, S1 play. Or it could fall even further. We'd have to go quite a bit out. The next level support, yeah, well, that's 65. Yeah. So anyways, it really depends on whether you are a bull or a bear. I kind of like this bullish idea, though, because we have the up, we have the down. Remember, the 50% projects and predicts the 1382. And look what's sitting up at 1382, the fair market value. It's kind of interesting, huh? What happens at the fair market value? You consolidate for 2 months. Okay, you consolidate for a year. Right? I don't know. Is that a year? Let's measure that. Okay, 200 EMA started here. July. And let's call this a breakout. Yeah, a year. A year. Wouldn't that be interesting? Head up to 70, or maybe even back to that same old range. Wouldn't that be interesting? Get above 70 and just float between 70 and 75 for a year. That's good if you are a carry trader. That would be great, although there isn't much of a carry on this, but that's the type of market you want as a carry trader. So a friend of mine, he runs a hedge fund that looks for market conditions like this. He wants to move sideways for long periods of time. So maybe I would show him this chart and say, hey, did you consider this? If we get above 70, this might move sideways for a year. Okay. Cool. Yeah, he wants market neutral conditions. Why? He can deploy a range trading strategy. Yeah. Is Kiwi doing any better? Well, we've analyzed this. So let me clean this up. Let me get rid of the bigger indicators. Oh, I got to go here. Object list. Regression channel. Kill, kill, kill. Standard deviation channel. Kill, kill, kill. Standard deviation channel. Kill, kill, kill. Regression channel. Kill, kill, kill. Standard deviation channel. Kill, kill, kill. Rectangle. Yeah, kill it. Kill it. Kill them all. Okay. I want to change. Yeah, let's now go into here. Price action pivot points, 55. That's good. And the other one's going to be 200, isn't it? 222. Same thing. It's interesting just well, why isn't it drawing the other one? Interesting. It's only drawing one. Where is it struggling? Is it the time frame? There, I guess so. Yeah, the other one's just, you can't do it for some reason. Okay, so what are we looking at here? Kiwi dollar. Okay, what direction is the trend? Greg is like, there's a great EA used in sideways market. Yeah, sell the top, buy at the bottom. Yeah. Okay. See, the trend is up. Okay. But price is overbought. So there's a higher potential now of a drop and then continuation. Okay, how do we get to that? Well, let's redraw some of these things using and combining different techniques, right? Okay. Let's call that a standard deviation, and let's call this two standard deviations. It's not actually true because, remember, I created this indicator. It's two different types of math, but it's easier to think of it that way. Okay, there's your buy zone, so that makes sense. And what is up here? Your take profit zone, right? So not that it will happen. The bottom is a primary support, and the top isn't a primary resistance. It's like a suggestion. Because really, if you're a bull in an uptrend, you may not even have a target. As far as you're concerned, you're going to let this run for 6 months. You're like, what top? You're like, the United States is going to avoid a recession, and China's going to reopen or do stimulus. So as far as you're concerned, this is going to go up for 6 months, maybe 2 years. So there's no limit, but it is a suggestion of when others are going to take profit taking. But it's a suggestion. The bottom is primary. If you're going to reload, that's your reload zone. Okay? Now, the secondary way of doing this, and I've already pointed this out today, is that you look at old resistance and it becomes support. And it's not a perfect zone, it's a suggestion zone. In this case, what it's suggesting is a fairly large pullback relative to the expansion we just had. Okay? Or the entire trend is going to speed up, and we're looking at this play here. We hit the top, it's come to the bottom, and now it's time to go up to the next level. I don't know the future, but one of those is likely to happen, and you need to make your decisions. Okay, that's an hourly chart, so you create a plan A and plan B on a 5-minute chart. So you're like, well, if plan A fails, then plan B is more likely. Cool. So you break it down into two pieces. So you're like, based on statistical analysis, okay, oops, let me turn that part off. Price action, pivot point. No, wrong one. Trend line properties, killed array. Okay, cool. This X represents a better buying price based on what has happened in recent past. So we don't know if it's right, but that's the logic. And then you go into here, okay, and then I have to expand this and zoom in. You can say anywhere around here is buyable. Is viably. Cool. Now, on this time frame, the short term, because the long term on this short term chart, is still slightly down, right? And that gives some confidence to that bearish. Remember, plan B is have it drop like 100 pips before it rises. So that is still sort of in play. On the shorter run, okay, the slope is changing to slightly, ever so slightly bullish. And the thing is, the more it's bullish, the more that this medium term goes kind of flat and then eventually slightly up. And then you'd have congruency of up on the 5-minute short term and up on the 5-minute medium term. But that would be kicking off the lower bound of the short term price action trend on the medium term chart, which was 1 hour. Oh my gosh. Brain all over the desk. Holy smokes, is it Friday? I'm about to lose my mind. Yeah. Okay. And if you're a bear, you're putting together your version of that. Okay. Now, do you remember what I just showed you on this trade? I put the trade. Do you remember this? This was a whole whopping 15 minutes ago. I put the trade on here and I told you it wasn't very good. Then I showed you all the different ways that you were supposed to consider entering a trade if you were using price action to scalp. And I highlighted over and over and over again, right? Old support becomes new resistance. There we go. So on that, my trade should be up in there. But look, I'm using this as a basis of explanation. So even if I put a trade down and it's piss poor, I can show you how to do a piss poor trade. Trust me, I'm capable of a piss poor trade. So you're like, wow, he would have been better off here. Yeah. Yeah. Good. Well, now you know. Now I'm not just kind of giving you esoteric kind of lessons. You're like, this is happening. So it's an okay trade. It's profitable. It should be better. And then we also know the first trade based on, remember when I did 1, 2, 3 for you? I said 1 is the top, and we predicted that on a 4-hour chart, I think it was. 2 was the lower low, and then 3 is should be the original entry off of that price action. What used to be support is now resistance. So 3 should be the first trade. Okay, trade number 1, we'll call that A. Trade A, trade B, and this should be trade C. Tripled up. That's how you should be doing it. Okay? By the way, there's a whole course at Investor Bootcamp on price action trading. I have a philosophy. Do you want to hear my philosophy? Of course you do! You have to listen because, well, I guess you can go find some other YouTube guru. But let me tell you my philosophy. There are 2 things you must know to be a consistent technical trader. The first thing you need to learn is price action. Okay? If you don't know the way the market moves, if you don't know the way the market behaves, you don't know jack. Okay? Oh, but Wayne, what should I use? MACD, RSI, stochastic, CCI? Which moving averages should I use? None of it matters. If you don't know how the market moves, you don't know jack. And nothing's going to save you. So you have to start with price action. And it's a fancier way of saying support and resistance. Okay? Imagine being a surfer and you didn't understand tides and winds. You'd spend a lot of time at the beach and not much time surfing, huh? You don't understand the concept that the moon could impact your waves. You don't understand the wind can impact your waves. So you just stand around like saying, man, this is a random walk down Wall Street. This is unpredictable. That's the funniest thing about efficient market hypotheses. Seems to me, and this probably sounds arrogant, but it is my opinion. If you believe you can't predict, I mean, not predict, I'm not trying to say that you should know, but you can, let's say, understand market dynamics. I don't believe Wall Street and the markets are completely random and unpredictable. But there's a theory called efficient market theory on that. And I can't tell you how high the tide is going to be tomorrow. I can't tell you what the wind is going to be like tomorrow. But I can look up in a book and tell you when the tide is likely to show up and when it's going to likely recede, and then when it's going to show up again and recede. And people can do these studies based on things like you can study the temperature of the water, the currents of the water, the cycle of the moon, how close is the moon to Earth, how far away is it from Earth, that kind of stuff. And then on top of that, you can look at weather forecasts today and say, is it onshore? Is it offshore? Is it 35? Is it 10? Is it 0? And you take all these variables and put them together and you're like, hey, today between 7 a.m. and 8:30 a.m., I think I should go surfing. Versus just sitting your butt down on the beach waiting. Because you're like, there's no way. All of this is magic. It's all random. I just have to wait for the waves to show up. But why do the waves show up? Nobody knows. You can't predict that. And I laugh at all that kind of stuff because you're right. It is complicated. But when you say you can't predict the market, what I would say, I agree with you. You can't. But there are things you can do that other people do to help understand these market conditions. It doesn't mean you know it for sure and doesn't mean it's perfect. But I think it's better than saying there's no way to predict it. Really? You just capitulate, throw up your hands. Zutzulu, what can you do? Nothing can be done. You can't do nothing. Really? Well, you do you. Okay. Richard says we can study past historical weather patterns also. Yeah, of course. Like El Nino and La Nina. Is it going to be El Nino next year, La Nina, or nothing? Well, that's hard to tell. It's a complicated cycle, but we do know they go in patterns, and we do know there are ways to measure it if the effects are starting to take place. And then we know also by looking at historical, historical data that if an El Nino shows up, you might find that very often, but not always, weather patterns happen in regions where you grow cocoa. You're like, wait, what? The surface temperature of the ocean near Ecuador very often dictates the growing conditions of, the chocolate beans in West Africa. Now, it's not a guarantee. It is nature and it's complex. But you could say, you know what? There are patterns we'd want to watch in the weather. There is a scenario called El Nino. And If it shows up, then you have considerations to be made. Maybe maybe it's dry in West Africa. Maybe it's wet in Iowa. Maybe monsoons are different in India. Okay. I was in a cyclone, a class 10 cyclone in Hong Kong. Yeah. Great experience. I was on the 140th floor at a Ritz-Carlton in Hong Kong. 140th floor, there's a swimming pool. And I'm up on the 140th floor during a class 10 typhoon, and the building is swaying like this so much that the water was leaving the pool and going up against the glass. And I'm the only person in the pool. And I Skype my wife and my daughter, and they start crying. I'm like, look at me, I'm in the pool. Oh, it's up on the glass. It's awesome. Woo, look at this, kids. It was amazing, right? Because it would go up over the edge of the pool, and then it would come down, and the ladder, it would come down so much that the water would drop below the ladder that you climbed to get out of the deep end. And then it would come back and it would go up the ladder and then over the top and then swing back the other way and go up a glass. So I'm on the glass. Water is up 2 feet against the glass. And I'm 140 stories above Hong Kong. Down on the street, trucks were being blown over from the wind. Now, the point here is, A, can you remember this story? Can you see the waves inside the pool? What resonates with you? The cyclone? Class 10 cyclone? There isn't a class 11, by the way. Can you imagine what it's like to be in a swimming pool at 140 stories? It's the highest swimming pool in the world. Now imagine the building swaying. Are you remembering that? Are you remembering, can you see the ladder that you used to get out of the swimming pool? Can you see it dropping, the water dropping below that and then suddenly coming up? Because that's 3 feet, right? Can you imagine any of that? Can you imagine me spilling out of the window that breaks and drop 140th floor? Can you picture me on my phone, Skyping my wife and my daughter, and they start crying? I want you to remember something like that. And then put the next step. That might have been created by a weather pattern somewhere, and it might make sense. Somehow these variables, the temperature of the ocean in Ecuador, El Nino or La Nina, can change the weather somewhere else. We don't know it for sure. It's not a guarantee, but we can track and say very often, if it's El Nino, then it might be bad for coffee. It might be bad for cocoa. If it's La Nina, there's a different effect somewhere. Right? Now, that's using weather to make trading decisions. Does the past predict the future? No. But it would be stupid to ignore it as well. So it's like history doesn't repeat, but it rhymes. So you should be aware. You should be in tune. Right. Johnny's right. The butterfly effect. I actually did, 15 years ago, I think I did it twice. Lecture on how to use, what was it called? But anyways, I go over the butterfly effect. How to use fractal geometry and chaos theory. So I have that somewhere. How to use fractal geometry and chaos theory in designing your trade plans. Again, there's no guarantee. But it's a thought process of if then, maybe. Or if then, not likely. But it can It can do whatever. Okay, so I want you to be able to think that. Frank, you saw that one? I don't even know what year that was. I can think of it. I think I did that around when I launched my book. So I probably did that in 2006, 2007. I think it was before I launched my book. I think it was about that same time. It might have been very close. I remember one presentation. I was pretty excited because I'd written this book, and then I'm in Vegas and I'm on stage. And I remember one of the slides. I said the book launches next week, but it's the #1 selling Forex book in the world. But you can pay for it, but you're not going to get it. It's not even out yet. And I remember grabbing the screenshot, personal pride. I don't consider pride a vice unless it's ungrounded, But anyways, I had pride. I wrote my first book, and a week before it launched, it was #1, right? And I think it was that presentation of doing fractal geometry and chaos theory. So you can say something like, watching a weather pattern and saying, I don't know the future, but I do know the past. And the past doesn't predict the future, but it might guide. It might frame the way you interpret current market conditions. What Harvard loved to say all the time was, through the lens. I hated that. For the longest time, I hated that. Like, through the lens of blah, 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 analyze. I'm like, what the hell's this lens thing? Well, through the lens of, if you see data that suggests an El Nino year, then filter the current data based on what has often or many times occurred. So let's say you see the weather pattern, you make a determination of what that is, and then you say, well, 6 out of 9 times in that cycle, we saw drought in the central part, the Midwest of the United States. Oh, okay. Well, I don't know if that's going to happen. It doesn't happen every time, but let's filter it as if that would happen. Okay. What would happen if there's unusually dry season in the Midwest? Okay. Lower yield on corn, lower yield on wheat. So corn and wheat prices go up? Okay, well, that's interesting. So we don't know if that's going to happen, but let's look at it through that lens. Let's filter it and say, well, if we saw signs of that occurring, AKA now prices going up for those grains, you could go to the wheat market, you can go to the corn market, and you can start trading those futures and say, okay, in scenarios in which wheat or corn look bullish using technical analysis, which in of itself doesn't predict the future either. It's just statistical analysis. But you're like, I'm thinking about being a bull because I'm thinking yields are going to go down, but you don't know how much it's going to rain. And you're basing this off this idea that you believe this weather pattern is occurring. So you're making a lot of assumptions. Then you go to the charts and say, okay, I don't buy lower lows, but after a higher high, I can enter at support if it's a higher low. And I only look for bullish scenarios in which I trade corn and wheat. And if the weather pattern comes true and you start to see on the Weather Channel or in CNN and such, like, oh, these are the driest conditions we've had in central United States in over 20 years, then guess what? The rest of the market's going to go, oh, God, but they might be a month late. And they're like, oh, God, we're going to have a shortage of corn and wheat. And all of a sudden, other people start doing the same thing, buying dips, but you're already in. And then we get to the end of the harvest. We get to the harvest season. And now it's September, and the farmers are delivering to the grain elevators their harvest, And the grain elevators are reporting shortages. And now the future market goes nuts because cereal companies and bread companies and everybody else that needs these grains, whiskey companies, suddenly all demand wheat and barley and corn. If you're going to make bourbon, for example, you're like, well, where do we, right? Or you want to make like a Canadian style rye whiskey, where you're going to need a lot of wheat, where a bourbon guy needs just a lot of corn, and you need a little bit of both. And all of a sudden, these prices influence now how much a bottle of bourbon costs. But you're okay because you were making money 3 months ahead of everybody. Or you're completely wrong, and the pattern didn't show up. It just rained normal this year. But the thing is, you never saw the technical analysis on the chart, and therefore, you had a hypothesis. It didn't come to fruition. Nothing ventured and nothing gained. Nothing occurred. You didn't get an entry. You didn't gamble. You didn't bet. You didn't guess. And it didn't work this time. And that's what is normal. That's why past performance does not predict future results. But it also is not random. You can be logical and methodical. Was that interesting? How many people are going to remember the Ritz-Carlton swimming pool story? I stayed there like for 2 weeks. I lived at the top of the tallest skyscraper in Hong Kong. I lived there for 2 weeks. It was so cool, man. Oh, I loved it. Dude, the Ritz-Carlton America has mediocre service, but compared to other hotels has good service. You go to foreign countries like Hong Kong or China and Japan, the service is amazing. I was up on the, because I'm club level when I'm up there, so you get like free food and free alcohol and stuff. It was great. Take advantage of it. But one day I was joking. It was like 2 a.m. I was just finishing up trading. And I'm up in the club and I'm like, oh, I need a glass of wine. And he's like, would you like a snack? I'm like, yeah, okay. So I get my wine and I'm like, yeah, mixed nuts and some cheese. Brings out a whole plate of cheese and mixed nuts, and I love it. And I finished that, and then I'm like, I said, hey, do you mind if I take a bottle of beer? Take a beer back to my room? I'm just tired. I just want to have a beer and watch TV. And he's like, would you like more than one? I'm like, could I have 6? And I swear to you, I was joking, right? And he brought me 6 beers. And I'm like, I love the Ritz-Carlton. And then the next day, and I was doing a boot camp webinar. And some of you guys saw me do this because I did a boot camp and stuff. But one day I called down to the concierge. I'm like, hey, I was thinking about a cigar. But the rooftop bar is closed because of this typhoon. It was really, really windy even before it got there. And I'm like, I can't really go up there. It's too windy, but I wanted to smoke a cigar, and I don't want to go to the other side of Hong Kong, right? I'm in Kowloon. I don't want to go to Central. I'm like, where can I smoke this? And first of all, where do I get a cigar? And the second thing, at 10 o'clock at night. And where do I smoke it? And he's like, well, I'll get it to you. What do you want? Monte Cristo number 2? Okay. And then I'm like, where do I smoke this thing? I'm in a suite on the club level of Ritz-Carlton in Hong Kong, 150 stories up or something. And he's like, smoke it in your room. I'll bring it to you. I'm like, no, I think I'm in a no smoking room. Like, this whole hotel's non-smoking. He's like, don't worry about it. Don't worry about it. You do whatever you want. I'm like, I love this place. So I'm not even joking. The concierge brought the cigar up with an ashtray and a gold cutter and the cigar I wanted and brought it. And then I did my FX boot camp live stream from the room, smoking the cigar. And I'm like, I love this place. Love it. So anyways, whatever you can do to remember these stories, I'm trying to create anchors so that you can go back and say, are the markets random or do they rhyme? They might not repeat, but they might rhyme. Okay? UK Kenny? Yeah. Oh, you're there now? I really want to get back. So my plan starting soon, probably next year, every quarter we're going to get together somewhere in the world. And Hong Kong and Singapore are way up on my list. As a reminder, gee whiz, I got to build a page for this. On 13th of September, we're doing a live meetup in Austin, Texas. We're going to meet up for appetizers and cocktails as a group, and then as a smaller group, kind of like, I don't know what to call it. It sounds silly, but like the VIP, because we can't have 50 people all go to dinner because A, we don't have a restaurant that big, and B, it's a pain in the ass if you've ever done it, and C, if we did that, there'd be almost no opportunity for you and me to talk. So I think what we'll do is we'll do a big group and then we'll do a small group and it'll be a nice day. So Austin, Texas, who's showing up for a craft cocktail, maybe a cigar, maybe a steak dinner? Huh? Get some hugs and handshakes and some selfies. Share our stories. Okay. Austin's cool, by the way. If you've never been to Austin before, it's cool. And I found a place. I have to call them. I've just been too busy doing the presentation, the Tuesday quarterly outlook. But I need to call them and reserve the place. Okay? But remember, it's just a networking event. It's just a cocktail. There's no training. There's no... You're right. So if you're in the area, it'd be that kind of thing. If you're like, well, I'm going to fly from Timbuktu and drop 20 grand just to get there. Whoa. No, be careful. But if it's no big deal and you're like, yeah, this sounds like fun. Yeah, we can have a couple of hours, two or 3 or 4 hours together. Yeah, Darko. Yeah. But I'd like to go to Croatia, too. So, okay. Andrew's in Austin. Awesome. Oh, man. Sorry about that, Andrew. Okay. Yeah. But like I said, Darko, that would be a very long way and a very expensive trip for a cocktail party. Right? And if you're thinking, well, maybe in the next day or something, we can get some time together. I'm busy the next 3 or 4 days. I'm there for a conference. So I'm spending, I don't remember what it was. I'm spending a couple of $1,000 on getting coaching education. I want to be a better coach. So in a weird way, I'm going to Austin, Texas so I can help you more. So I will be taking a coaching course. And it's like 3 days. And then, dude, I got to get home, right? So I'm flying there 1 day early so that we can all meet together and do this cocktail party. That's why I'm getting there on a Wednesday. But Thursday, Friday, Saturday, or whatever, I guess, is it a Thursday that we're there? So we're meeting Thursday. Maybe it's not a Wednesday. Maybe it's a Thursday, and then Friday, Saturday, Sunday. I don't remember. I think it's the 13th. But anyways, I'll get you the dates. I have to build a website. Okay. 13th is a Wednesday. I don't know the conference. So maybe the conference is Thursday, Friday, Saturday, and I fly home Sunday. Something like that, right? Darko's like, yeah, he's going to Croatia this weekend. Send some pictures from the seaside. Beautiful, wonderful, wonderful, wonderbar. Yeah, very cool, man. Yeah, it's funny. I scheduled like a podcast type thing next week, and I scheduled this Tuesday presentation. And then my wife told me I was actually busy on Tuesday doing family stuff. So we've had to move the family stuff so I can do this thing on Tuesday, the quarterly outlook. And then I have this podcast thing scheduled on Friday. But then my wife says, no, we're on family vacation on Friday. I'm like, dumbass, what? She's like, you're not in town on Friday. We're at the beach. I'm like, we're at the beach? I'm like, I don't even have this stuff on my calendar. I don't even think that way. Holy crap. So it's hard for me to get all this other stuff too, like this conference. Okay, I know I'm going, but so I got to pull something together, get a little web page, get a little sign up form so you can RSVP. There'll be a small fee so I can pay the restaurant and everything. Yeah. So much to do, so little time. So I hope everyone's there, but don't drop $5,000 on going there to hang out with me for 2 hours unless you're a millionaire and you're like, dude, it's just, I have to use my jet anyways. Then call me up and pick me up in your jet and we'll go to Austin in your jet. But otherwise, realize it's just a couple of hours together. Well, more than that. I think we'll get more than that. I think we'll do more than that. There'll be, yeah, we'll have a good time. Cool. So our scalp is just scalping. We're not quite following. We're almost following. Okay. I guess we can do it this way now and just kind of adjust. So it looks like we have about 5 people. Anybody else? Okay, Euro also there. Is the stock market open? Oh my God. I'm telling you, it feels like the end of the day. It's been such a long day already. Holy smokes. So anyways, stock market's not even open yet. But we're scalping short, but we're in a midpoint cycle level. So this is where risk increases. But it's following pretty okay. We should be getting new volume. Notice that this is still in play, okay? But it's the second pullback, okay? Like that's kind of the first one here, and then that's the next one. And, hopefully the new volume that's entering this time of day. See, as we get closer and closer to the stock market open in the United States, you get front running. So this is front running volume. And if they agree with the direction that I chose here, then there will be follow through. You see? So I'm front running the equity market. You understand that? Use the wave analogy again. I'm floating out at the ocean. I understand that the wind is likely going to pick up today. And I understand that the tide is just starting to come in. So if the tide is coming in and the wind is blowing out to sea, head high, dude, head high. I'm going to have some nice waves. So I might be out there in the ocean and the ocean looks like glass. But I know the tide is coming, and I believe the wind is going to pick up as the air warms up. And the air is going to warm up because the sun is rising. And that's going to create a breeze. And this tide is coming in anyways because of where the moon is relative to the earth this time of year. And I'm like, there's probably going to be some good waves. So I'm already out there. If you're in California, you got your wetsuit on. You're out there, actually dry suit, right? That's how cold it is. And you're out there waiting, and you're like, the conditions are glassy now, but in an hour, it's going to be head high. You don't know that for sure, right? Right. So just to show you, things have gone from mixed to slightly more bearish. It's not bearish, but it's gone from 0 to -1. It's turning a little bit bearish. I'm already short. And that would be influenced by a bearish market condition. Risk off would be red zone. So -2 would turn us bearish. -3 definitely risk off in the moment. This is just today, daily, only now. Okay? So Johnny's like, VIX is up. So we could probably know that just by looking at this. So we go to the gauges. And daily VIX up 0.73%. If it goes above 1%, it's going to go -1 and drop this. If the S&P 500, instead of going up, turns down, this is going to become more bearish. Okay. Cool, right? I know, right? But of course, this could all change when the stock market opens and this flips around. Then you have, risk on, risk on, risk on. But right now, in the moment, this is weekly, this is monthly. Like, think of this as swing trading and position trading. Now, 2 days ago, these are both zeros. Now they're 4s. Yesterday, this was 3-4. Now it's 4-4. Like, they're changing in real time. So you're on these time frames, the way you read this is risk on, consider selling these assets, consider buying these assets. Cool, right? I know. Oil still flat, gold still flat. S&P 500 is still a little more bullish. Interesting. So it hasn't collapsed. Euro dollar flat. Oh, I forgot to tell you guys. Hey, everybody. I unlocked 2 new features today. Well, actually, one yesterday, one today. We have an inflation gauge now. This is inflation around the world going back to World War I. I know, it's silly, right? Yeah, well, it gives you context, but you can zoom in. Check this out. Whoa, I just zoomed in. Has to redevelop the chart. It's actually building the chart. There it is. Let me expand this a little bit for you. Beautiful, right? Since 1985, this is global inflation. Shows you how bad things were in the 70s and where we are now. Okay? Cool, right? But you can just say, well, why don't we compare this? How about euro versus dollar? Oops, euro only, and then compared to dollar. Cool. Isn't that pretty? Inflation currently is higher in euro than the United States. So now you can do the comparative analysis. And I can zoom in a little bit more. Okay? Very nice. You're like, that's really cool. But then how does that compare to CAD? Beautiful, right? I know. Okay, so that's available now to QuantBox Pro subscribers. And wait for it. I unlocked this morning. This is a way to analyze GDP going back through 1960. We can zoom in a little bit to more current history. Very cool. There's the impact globally of COVID. The UK was hurt the worst. Down negative 11% on GDP. Oh my God. Then the huge recovery. And look at globally. Global GDP is in a downtrend. Uh-oh. So if you're worried about recession, uh-oh. But let's take a look. Let's focus on, let's maybe focus on, let me get there. Hang on. I glitched out. There we go. Let's focus on the UK. UK was farting around here of about 2% GDP growth per year, which is about right. Then it dropped, recovered, and what? This is it now. Is 0.10 good or bad? Well, it should be 2. And if you go back in history, however, they have a very poor GDP trend. This is what the trend is over the period, right? Since 2013, not their 50 year, but since 2013, GDP has steadily fallen. So that's your potential GDP relative to the actual GDP. And this is studies that economists do all the time. So you're like, well, that's only 2013. All right, let's throw some more dates. Let's go back to 1980. Was that Margaret Thatcher? Huh? Thatcher hanging out with von Hayek? Okay, going back to 1980. Okay, now this is potential GDP in the UK, right? We had to recalculate it. And still not good. You can see it's a negative slope, but still above zero. So we are actual GDP is not far below potential GDP, but it is still below. Oh, well, you're like, well, why don't we go all the way back, Wayne? Let's get as much data as possible so we understand the historic context of British GDP, okay? And once again, even then, going all the way back, the UK economy is below potential. Yeah, Peter's like, XRP is not flat. No, it's definitely an outlier. But, I mean, Bitcoin was up 5% yesterday. Like, holy smokes. But, yeah. We'll look at Ripple. But you're like, dude, that's crazy, Wayne. Yeah, well, what about Australia? And Australian GDP and all that kind of stuff, right? So anyways, nice. So you're welcome. So now you can analyze and compare GDP over history between multiple assets so that you can visualize how the economy is doing and how the economy should be doing relative to past performance. And in particular, the rise over the run. So you have to calculate the mean and then the slope of the mean. So there's your y equals mx plus b kind of stuff to calculate potential GDP for Australia. And then we pull the data from the Reserve Bank of Australia to show you actual GDP versus potential. And we call that a productivity gap. Okay, the distance between, let's see if I zoomed in too much. Yeah, that's too much of a zoom. I need a couple more quarters. Hang on. Oh. No, that's still not good enough. I have to add some. Need some more quarters. You can't see it. And then, of course, it changes it. All right. Because it's calculating the average over those 3 quarters. But anyways, what we look at is this blue line is below the red line. The blue line is what is. The red line is the historical average, in particular the slope of the historical average. So it's calculating the change over time. Nonetheless, that would be a normal level of GDP. And right now, the Australia is below its potential GDP, and that is not good. And economists study this all the time. So this is, as an economist, I find this important, where this is called a productivity gap, and the central bank probably knows this and would institute a policy that would increase productivity and put us slightly over potential. So in the United States, our potential GDP over 50 years is 2.2, and we want to have GDP slightly above 2.2 and inflation slightly under 2.2. So if we had 2.5 GDP and 2% inflation, the United States will be filthy, stinking rich. We'll have lots of money relative to inflation, and it's all created because we're unbelievably productive. Or the central bank and the central government printed a bunch of cash, threw it out there, and we're temporarily rich, and then on the long run, we're poor. It's nice to know which one is which. So anyways, that's all released. That's 2 more features now available for QuantBox Pro subscribers. QuantBox.co. And if you're like, dude, this is so over my head, well, take the macroeconomics course, which everybody gets included, and take the QuantBox training course, which it's included so everybody gets. And then, of course, watch the daily live sessions like today, Friday the 14th. Look, we're doing comparative analysis of inflation. Yeah, nice. So, holy smokes. So I got myself a little scalp. I'm going to move my stop from way up there. I'm going to move it. Cool. And that's that. Winner, winner, chicken dinner. Ding, 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 ding. All right, let's go look at Ripple. Yeah, boy. Okay. My WTI on the 200. Should we get off Biddy or Natty? I'll get off Natty. Okay. Let's get off the Natty and let's go to boom, 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 boom. Ripple, baby. Oh, God. Okay, the all-time high was 50 something, and now it's hundo. We got to 96. It doubled yesterday. Whoa, dude. It doubled yesterday, but is now, from yesterday's move, down 382. Okay. Ooh. Wowzer, huh? Is anybody here dehydrated? Yeah, me neither. Not me. Couldn't be. Then who? Wait. I just saw Darko's post. You've been flying from London to Croatia for 35 euros? Shut the back door. You're kidding me. So transportation inflation in the United States, according to the recent CPI, has dropped from like 11% down to 7%, which is a fancy way of saying everything's expensive here. My dad, I flew out here, I don't know, 6 months ago. I don't know, 5 months ago. I can't remember, but a fairly recent trip. And he's on the West Coast, I'm on the East Coast. Typically, that flight is about $350. I think I paid $800. Now they're like, well, if you take the red eye and you make 4 stops, you can save $35. I'm like, I'm not putting my elderly dad on a flight like that. So I'm like, I need to fly specifically these dates, and I want him to, and not a first class ticket, by the way. I think it was the next one. What do you call it? The premium economy or whatever it was. And direct. $800. Gee, that's a $350 to $400 ticket. And it was booked in advance. So, like, you don't get that. I think even Atlanta to New York, I think, is $400 or $500 right now. And it used to be like half that. So it's almost like on Delta, things are double what they used to be, let's say. Pretty close. And if you think, if it's been expensive, let's say 2 years ago it was 20% more expensive, and then last year it was 10% more expensive, and now it's 5% more expensive. Well, it's 20 plus 10 plus 5. Yeah, that's it's added up. It's cumulative, right? The cheapest flight, did I even buy my? I don't think I bought my. I forgot about that. I didn't even buy my Austin, Texas flight. I'll have to do that now before I forget. But flying to Cuba is $180. So the cheapest flight in the world is flying from Atlanta to Cuba. So I'm like, free. Now, the funny thing is that's the cheap seats, right? So the last time I went, it was pretty funny. Because I'm like, cheap seats? I don't fly cheap seats. But then I'm like, it's only like, you fly for like 40 minutes and then you're in Fort Lauderdale. And then you fly for half an hour and then you're in Havana, right? So I'm like, I don't need to drop a big bundle on first class or something, right? And I'm like, dude. So, absolute full flight to Fort Lauderdale. When you fly in the United States, every seat is taken. In fact, they oversell it by 20 or 30%. It's amazing. So it's full. And then I get on the flight from Fort Lauderdale to Cuba, same size airplane, hundreds of seats, and there's like 6 of us. They didn't even bring out snacks. They didn't bring out a Coke. They're just like, yeah, sit anywhere you want. Like, just whatever, dude. But don't waste, right? You can almost see the look on the steward's eyes. She's like, don't ask me for anything. I'm just going to sit down and I'm going to read my Kindle. No Coke, no potato chips, no champagne. Just like, dude, whatever. We're losing money on this flight. You should buy me lunch, right? And I'm like, yep. And there's that American attitude too, huh? Whatever. Take care of yourself. We're losing money on this flight. You take care of yourself, bro. Anyways, but yeah, pretty funny. I don't even know why JetBlue does it. I mean, think of it. The 6 of us had to pay for 2 pilots and probably 3 stewards because there's a minimum on these crews. And the fuel on that flight, a 30-minute flight on like a 757. What is that? 40 grand each way? And there were 6 of us paying $180 a ticket. But on that leg of the cost, let's say it's only 90 because there was 2 legs on this. Atlanta to Fort Lauderdale to Havana. So they're making like $500. They're making $500 revenue, and it's got to be fuel 40 grand, plus the 2 pilots, plus the 3. Oh my God, 5 employees, right? My God, and then the maintenance and insurance, and holy smokes. But maybe they get kickbacks from the government. The government says, you know what? We need an American airline to fly there, so we will give you a kickback or something, huh? Yeah, that's what I'm saying, Johnny. Yeah, same thing, right? I wonder why they do it or how they do it. Maybe that's it. That must be it. So there must be a way. But like government officials would fly private, wouldn't they? But maybe not. I don't know. So anyways, I'm probably going to be back in Havana, Rio de Pinar, middle of August. I got to get back in time for the 3rd week of August. But yeah. So if anyone wants to do a meetup for some rum and cigars in Havana on the Friday night, I'm there, which I think is the 19th. If you just, I can arrange it. It would be cool. I'm going with my buddy. I'm probably bringing my dad. And it'd be cool, like, if 4 or 5 other people are like, oh, I know you from YouTube, or you're a boot camper or whatever, and you just want to get together and just hang out. So, Johnny, probably at the end of the year. I'm working a deal with a very large financial I'm not. Somebody on my behalf is pitching. So I don't want to over preach it, but pitching the idea. So not trying to raise money, but pitching the idea of my endowment fund to see if they're interested in that kind of thing, because they're an ultra conservative, very old money Wall Street firm, and he knows them very well, and he's like, dude, they might somehow want to sponsor this, like not do it, but maybe be the broker dealer and help with the logistics and some that kind of stuff, right? And help you get going, and be somehow affiliated with this idea, because it's so ridiculous. It's so ridiculously conservative. And so so I might have to go out there and talk to them if they're interested. No. The 19th of August, I'm going to be in Havana. The 13th, I think, of September, I'm in Austin. So there's 2 things going on. Yeah. And then maybe October, I'll do New York. October's nice for New York. November, So maybe we'll do a New York thing too. I don't know. I'm busy. Can't you see? But there's a small chance maybe I push off Havana to October. Maybe October's better. I have a feeling Cuba is hot in the middle of August. I have a feeling. I can't predict the future, but past performance tells me there's a pretty reasonable probability that the middle of August in Havana, Cuba could be on the warmer side. Could be a rabbit, could be. And then, but you have the ocean breeze. But this time I want to go to some towns. I want to go inland. So I have a feeling it's going to be hot and humid. But I don't know. You know what they say in Cuba? Well, better than North Korea. Like in Borat, right? Our potassium is superior to Kazakhstani potassium. Our potassium is superior to Kazakh potassium. Oh, don't watch that movie. What's the other guy that does kind of a Borat character? Panos? Is it something like that? Panos? Panos. Does anybody know that? Oh, yeah. All right. I think I'll leave it up. I'll leave today's webinar with something that probably is a little inappropriate. You guys want to hear something funny about the Greek response to Germany bailing them out back in the financial crisis when the euro was going to zero? It's totally inappropriate. It's very offensive. It's sexist. Does not represent my views. Hey, I hung out with Angela Merkel. He makes jokes of Merkel. She spoke at my first graduation ceremony. Okay. And so this will be the end. This is the end of today's webinar. So if you don't want to hear it, you can go now. If you can't wait to see the Greece response to being bailed out by the Germans, warning, like I said, it's sexist. I don't think it's racist. There's mentions of Nazis. You might hear a story about a penis. So if this offends you in any way, or if you hate Borat, you're going to hate this. So you should go now. And I'll leave it to you. I'm just so exhausted. I'm actually sweating. So, so a little laughter might be fun, and then we'll go have a weekend. What do you stink? Smell like a plan? Where did the trade end up? I got $5 on it. Nice. Got a free latte, bro. Cool. So let's get on with it. Have a nice weekend, everybody.
Hello, Germany and Europe.
I'll have to start.
My name is Mr.
I can't hear it yet.
Hello, Germany and Europe.
Can you hear it?
My name is Mr. Panos. And this is a message from the Hellenic people around the world. Fuck you, Malaka! Genius. Genius, genius, genius. What's happening to the Greek economy? Why is it in shambles? I'll tell you why. Because we've been playing a trick on you. We're lazy? No, we're resting. Sure, we worked for the Turks for 400 years. We're on vacation. The so-called crisis in Greece is the happiest day of my life when I heard that Germany was going to send another bailout. Bailout. Thank you for your money, Germany. We have been waiting a long time for war reparations from World War II. The Chancellor of Germany is Angela Merkel. She's a woman. Are you going to give me a loan? This is the first time a woman is giving man some money. What happens? The Chancellor, she comes home from work and her husband makes a schnitzel sandwich in his apron. Everyone had the motivation to join the European Union in the first place. There is a
All right, I can't take it. It's so inappropriate. But if you think that's funny and fits your humor, I'll give you the link. I got to go throw water on my face so I have the strength to keep going today. I am sweating buckets of energy drinks and of coffee. It's just pouring out of my skin. So I'll leave it to you. Markets are open. Life is good. Life is great. Life is beautiful. Thank you for being part of my life. I will see you later. Have a wonderful weekend. Go get it, but be careful. Go get yours. Cheers.